All right, let's talk about CNH Industrial. They just dropped their latest earnings report, and honestly, it's a real roller coaster. On one hand, they had a fantastic finish to the year, but on the other, they immediately followed it up with a pretty grim forecast for what's coming next. So let's break down what's really going on here. First things first, let's dive into the good news. Because CNH really did start their report with a bang, delivering results that, caught a lot of people by surprise. Okay, so just look at the sheer size of this beat. Wall Street was only expecting about 11 cents a share. CNH came in and delivered 19 cents. That's not just a beat, that's a massive surprise to the upside. It really shows they ended 2025 with some serious momentum. And the good news didn't stop with profits. Nope. Revenue grew by almost 6% compared to last year, beating expectations by nearly $250 million. So for the quarter, the story was simple. They sold more stuff and made way more money on it than anyone thought they would. Now, you'd think a performance like that would have sent the stock flying, right? But it didn't. And that's because this is only half the story. This is where the plot really thickens. Because this is the part that totally spooked investors. The company's official forecast for the year ahead. And let me tell you, it paints a much, much tougher picture. So right after that strong finish to the year, they're now forecasting that sales will be flat or could even decline by 4%. And just look at the earnings per share. That's a big drop from last year. This forecast is a huge blinking sign that the company sees some major challenges on the horizon. And the pain, well, it's expected to hit immediately. Management was super clear that the first 3 months of 2026 are probably going to see zero profit and a substantial burn of cash. That is a jarring shift from the quarter they just reported. So what's going on here? Why these sudden, dramatic reversal of fortune? Well, CNH pointed to what's basically a perfect storm of external pressures that are, for the most part, totally outside of their control. There are a few really big drivers behind all this. First, crop prices are low, which means farmers just have less cash to spend on new equipment. Simple as that. Second, demand is weakening, especially in a key market like North America. And finally, they're still trying to clear out all this unsold machinery that's just sitting on dealer lots. And tariffs. Tariffs are another major headwind. As you can see on this chart, the hit to their profit margin is set to nearly double for their agriculture business. And for construction, wow. It's a massive 500 basis point hit. We're talking a full 5% of their margin, which is just an enormous cost to have to absorb. But CNH isn't just sitting back and waiting for this storm to pass. They laid out a really clear multi-year strategy, and it's all focused on strengthening the company from the inside out. Their whole plan is built around these 5 pillars. But what it really boils down to is focusing on what they can control, improving how they build their products, making sure the quality is top-notch, and pushing forward with new technology. And they're already seeing results. They cut $230 million in costs last year alone. And they're on track to save over $500 million by 2030. That kind of saving is going to go a long way towards fighting back against those painful tariff costs we just saw. And they're playing offense too, which is great to see. They have a packed pipeline of new products coming, from powerful tractors to advanced harvesting equipment. This is all about investing now, so they're ready to grab market share when the cycle eventually turns positive again. Now, this quote from the CEO, Jared Marks, this is incredibly telling. He's talking about consolidating their dealer network and getting their brands, Case IH and New Holland, to stop competing with each other and to start competing with their main rival, the one with the green-colored products. He's not so subtly calling them out. So let's put all this together. What does the road ahead actually look like? Well, CNH was very, very clear about what they expect to see this year. The company is basically bracing for a brutal start to the year, a real tale of two halves. But they expect a significant recovery in the second half. And they're even forecasting a return to year-over-year growth in both profits and margins as their cost-saving measures really take hold. So in short, their strategy is to survive this short-term market downturn. They're cutting costs, they're managing inventory, all while investing in new products and a stronger dealer network. They are weathering the storm so they can emerge more competitive on the other side. And that really leaves us with the central question. They've identified the problems and they have a clear plan. But in a tough market like this one, execution is everything. Will their long-term vision be enough to carry them through the very real challenges of 2026? Well, I guess only time will tell.